Hi guys, so I just wanted to jump on with Steve. Steve just dropped his pen there just as we came on. But I just wanted to jump on again with Steve to answer any mortgage questions that you might have at the moment. We're getting loads of inquiries. A lot of people facing the same challenges. So in this sort of video series that we've been doing, we're just trying to update everybody in real time. And hopefully some of these will relate to you and help you out there. If there's something new that you've got and you want to ask us, drop us a message and we will do a video for you. I'll get back to you and give you a call. Okay, so I'll jump straight in. Steve, I've got a few questions for you. They're going to come out thick and fast. There's only about 5 or 6. I'll timestamp these for people, by the way, as well, just in case you want to jump straight to something that's more applicable to you. So first one's quite a generic overview, but are there any challenges at the moment in the mortgage market?
So challenges are, a lot of the time is trying to secure your interest rates. The problem is the interest rates are moving so quickly that the challenge is to try and lock that down as quickly as you can. I mean, there's always going to be challenges in regards to self-employed. Since COVID, you know, they're asking for a lot more information about trading, businesses, profits when you're self-employed. So that has kind of always been a challenge, but a bit more of a challenge now. But employed, you know, decent deposit. You spoke to a broker, you spoke to your bank, you know you can get a mortgage. Then the main challenge is trying to secure that rate because, you know, literally every couple of days, these lenders are moving rates, changing products to manage the flow of business. Yeah.
So I think it's just on that then. It's fair to say that the banks are lending. It's just that the rates are changing so fast. It's difficult to keep up. So
it's difficult to keep up. Yeah.
Yeah. You know, so the key is act fast, essentially.
Yeah, act fast to secure that rate. And you only ever secure that rate once you've physically made an application. So if you're approved, that does not guarantee that you've got that rate. And some of the lenders now, you're having to book funds in advance to secure the mortgage funds as well as the rate. So sometimes if you can't book funds on that particular day, you might have to wait till the next day. And then the problem you've got then is rates might be higher. And that's the risk you run. But yeah, it's just a case of really, as soon as you're ready, just jump on it straight away, get it sorted, get it in place.
Right. Okay. Thanks for that one. So last week there were rumours that lenders stopped lending. What was what actually happened there?
Yeah. So a bit of a knee-jerk reaction following the mini budget. You know, I don't really think it was related to the mini budget as such. I think it's purely because a lot of people are remortgaging. A lot of people are doing what I said, is trying to lock down their rate. And because of that, the lenders have got an influx of applications. And as you can imagine, there's thousands of applications coming through the door with these lenders. So they've got to deal with that influx. And to do that, sometimes they have to switch off the phones, not lend for a day or two to deal with the massive volumes that they're getting. And the knock-on effect of that at the moment as well is we've got service delays. Some lenders are 24 days before they'll even look at a payslip or look at your application. So, I think that was purely down to the fact that they're just slowing the influx of applications to deal with everything as quickly as they can.
It's good context because obviously the headline everywhere was banks have stopped lending. It was all such doom and gloom, but it wasn't actually the case, was it?
No.
They were stopping lending for maybe that 24, 48-hour period.
Yeah.
They were always coming back.
Yeah, about halfway through last week, half the lenders in the market kind of withdrew, but they were always going to come back this week. And obviously they've got to reprice their rates, you know, with the uncertainty in the market and the fact that things are changing so quickly with the economy. You know, sometimes you've got to take yourself out of the situation to review it, to then decide what you're going to do with the rates and products that you're going to provide. And again, still today, you know, rates are being pulled from lenders, but only because they don't want to be at the top of the list and get all the business and have a service delay. So they're increasing the rates to come down there. And then the person at the top's having a day or two of influx of applications, and then they're moving down and increasing the rate. Yeah. So it's a lot of that at the moment, which is basically lenders controlling service levels.
I think people forget that they suffer the same issues that regular businesses do. You know, if they've got loads of business in, they're sometimes probably overworked, understaffed. So it's the same.
Yeah, and like with anything, if there's massive demand, they're going to charge you a higher price for it because the demand's there.
Sure. Yeah. All right. No props. Thanks for that one. Okay. This is a common question I'm getting asked at the moment. So are there still fixed deals available? A lot of people that I'm speaking to from the estate agency side just don't like uncertainty. So are wanting to fix their rates for as long as possible. So what's happening there?
Yeah, so fixed rates are still there. Like I say, they disappeared for a bit with a few lenders last week, but they're back in the marketplace, albeit priced quite high now compared to what we used to. You know, you've got your 2s, your 3s, and your 5s, your 7s, and your 10-year fixed rates. Obviously, 10 years is a long time to commit to. But always remember, you can port your mortgage when you're on these fixed rates with a lot of these lenders to avoid any penalties if you do move within the fixed rate term. But your 2s and your 3-year fixed rates, yesterday when I was having a look through, are priced higher than your 5 years. Now, that obviously means that, they're pricing the 5 years because they know that they can afford to lend you on that rate for 5 years, whereas the next 2 and 3 years are quite uncertain. So they're charging you quite high rates because they might lose out over that period of time.
Okay, so that's good news that they're still available, though, for people who want a bit more clarity in the future. Right, this one's controversial, I realise. You probably won't be able to stick your hat on it if you like, but is it worth considering remortgaging now, even if you're in a fixed term? So what we're saying is, you're in a fixed term, you've got redemption penalties, a bit of jargon there, but ultimately, if you come out of the rate, then you're going to get charged a certain amount of money to do so. Is it worth doing that to fix a new rate now for, say, 2, 3, 5 years?
Yeah, it's very specific to your circumstances, the size of your mortgage and how long you've got left on that fixed rate. Generally, if you're coming up to 6 months before that fixed rate, that's the best time to be reviewing your mortgage to try and avoid penalties. But if you've got longer terms on that fixed rate, 2s, 3s, 5s, and you want a bit of stability for the next 5 years, generally, which is what people want at the moment, then it might be worth paying the redemption penalty, coming out and refixing for that new 5-year term, rather than refixing in 2023, 2024 when it's due, and the risk of rates being a lot higher.
Great. Okay, so one customer I spoke to was saying, I don't want to pay £1,500 to come out of my mortgage. That's ridiculous. But I think what we were looking at was, yes, you will have that £1,500 added to your term, but would the rise in interest rates over the next 12 months potentially offset that? And could you fix it for a lower amount for the next 3 to 5 years? I think that's what how the conversation went. So I think what you're saying there, obviously, it's down to personal circumstances. The amount of redemption might not make it worth it. You're obviously gambling on the future interest rate. We don't know. That's for sure.
We don't know. Government don't know. Bank of England don't really know.
No, that's it. So, few things to consider there. But I think the answer, by the sounds of things, is, again, just speak to someone, find out exactly what it entails, but there's options for you.
Yeah, and it might just be a peace of mind that you want, and it might be worth just paying that 1,500 quid, £3,000, whatever it is. You could lump it into your mortgage. You don't have to physically find it. Some people, they think they've got to physically find the cash to pay it to come out, but you can remortgage and raise the capital to do that, just to give you peace of mind and not worry for the next 5 years.
Yeah. Okay. Next question, second to last. Let's have a look. So, can a bank? This is important. So, I got asked by a seller the other day who was asking for an update on the chain, finding out where everybody was up to. And she just sort of said off the cuff, can the bank change their mind once they've offered someone a mortgage? I'm just a bit worried that we're going to get close to the sort of completion dates. And then with all the interest rate changes and stuff, the bank are going to say, I'm sorry, we're not lending to you anymore. So is that a thing? Can they literally say to you, do you know what, we've changed our mind, we don't want to lend to you anymore? It's a part of the conveyancing process.
Yeah, I mean, I've not come across any cases yet that have where the offer's been withdrawn. Lenders always reserve the right to credit score you just before they release the funds or throughout the process after it is offered. And if anything's changed with your credit file, your circumstances, then they can pick that up. Then they might hold the funds and just reassess everything based on any changes they come across. But it's a low amount of cases that they do check. The only risk you've got is the offer running out.
Yeah. Okay. And I think I'll come to that one because that's actually the next one. You've preempted it. But so just on that then, what am I trying to say here? So if you said something there about they might just, before you complete, check your credit score and stuff again. So I think you've just touched on something there in top of my mind that's really important. Yeah. If you've got a mortgage going through, don't start getting car finance. Don't start doing other things with your credit. Get your mortgage through first. That's the key. Is that right?
Yeah, the mortgage company can only assess your circumstances on the day that they receive the application. So if anything changes from that point to completion, then it could mean that you don't end up buying that house. They won't lend you the money. They just won't lend. So, and the most common one is car upgrades. So, your PCP is coming to an end. You need to hand it in. You need to get a new PCP. 9 times out of 10, you want a bigger, better car, and the payments are higher. And it's not just that monthly payment, it's the balance of that car finance that goes onto your credit file that means you know, sometimes these cars are 30, 40 grand and someone's salary might be 25, 30 grand. And all of a sudden they've got over 100% of their gross income in unsecured finance.
Right.
And that's how car finance can impact in general. But yeah, you know, when the mortgage is offered, do not change a thing.
Right. Good. That's really good advice, that. Because I know people are always tempted, particularly cars and stuff. I think they've got it all locked in. I see it all the time. Right. Final question. Are banks offering extensions if a mortgage expires? So again, I think we may have briefly covered this before, but yeah, this is where obviously you're getting close to completion. You might have a chain of 4 or 5, and then somebody in the chain's mortgage offer expires, and then they go back to the bank. Can they get an extension? Because it used to be quite commonplace sometimes that the bank would just say, yeah, no problem, as long as we can see that it's going to complete, we'll offer you an extension. Is that happening at the moment still?
So you've got 6 months validation once the mortgage is offered. So that's your survey done. They've signed off all the underwriting, signed your pay slips off, all that stuff done, and your mortgage is offered. You've got 6 months to complete on that product that they offered you when you apply. Some lenders are 3 months, but a lot of them are 6 months. Now, if you don't complete within that 6 months on a new build, 9 times out of 10, you can generally get a month's extension also, because they know builders can't complete, well, they hardly ever complete builds in time. So, and because it's a brand new property, they're not concerned about the valuation really being an issue. So they'll allow that extension. If it's a second-hand property, and it depends, you know, how the market moves forward. But if property prices do slow down a little bit, then they'll want to do a valuation to reassess everything, to extend the offer, or you know, a lot of lenders will just say, no, you have to choose a new product. So all of a sudden you've got to choose a new interest rate 6 months further down the line to still buy that property. And that interest rate at the moment, you know, there's a high chance of that being a lot higher than it was 6 months ago when you applied. So you've just got to keep on the ball. A couple of months before that mortgage offer ends, speak to your mortgage advisor or broker and just say, look, you know, there's a possibility I will complete within that time scale. But if I do need an extension, how do we go about it? And just preempt it and prepare for it.
Yeah, I think just again from the estate agency side, it's so important. We see it a lot. I think now more than ever, just check if you're selling a house, make sure that your buyer is in a position potentially to get a new product if it's going to expire. If it's going to expire in 2 months, you know, the conveyancing process at the moment is averaging like 5 months. So if you know that it's going to expire in 2 months, the chances of that product being available by the time you come to completion is slim.
Yeah, and more so at the moment, Dave, just for the fact that lenders are taking longer to process, and like you said, then conveyancing process is 4 or 5 months, 6 months. I've got quite a few cases that are coming up to 6 months, just due to the volume of cases solicitors are dealing with as well.
They're under the cosh as well, as much as anyone. So I think it's really important that. So just make sure, even though somebody's got an AIP or they've applied for the mortgage and they've got it all agreed, just make sure that they're not nearing the end of that. Because if they do have to reapply for another product, then it may be that new product is so much more expensive and all of a sudden it becomes unaffordable. I've spoken to so many people over the last 3-4 weeks who've had to change. Well, they've either stopped looking or they've changed the budget completely. And 9 times out of 10, the budget's dropping quite considerably because they just don't want to be paying as much as they're now getting offered compared to maybe 4 or 5 weeks ago.
And because the rates are changing so often, so they might change 5 times in the space of 6 months. You know, 6 times they might change every month. So big increases as well, not small smidges.
Lovely. All right, Steve. Thank you. We'll leave it there. It's all look. It's what we're trying to do here is address what's going on. You know, it's not all doom and gloom. There's plenty of mortgage products available out there. Yes, interest rates are rising. It's going to be tough for everybody. But hopefully this is helping someone. If you've got a question, please get in touch. If you're nervous about the future of the mortgage market, you just want some simple advice or a chat, please do let us know, and we'd be delighted to help. And obviously, if you've got a question as well, drop it in the comments box, or drop us an email if you're watching it somewhere else. And yeah, we'll do our best to come back to you and help. But for now, thank you very much.